Hello and welcome to the latest Fund Manager video interview. Today I have with me Dale Nichols, Fund Manager of the Fidelity China Special Situations Investment Trust. Dale, thank you for your time today.
Thanks, Carl. Great to be here.
First off, could you run through your investment checklist, the sorts of qualities that you like to see in a business and also what you don't like to see, which would potentially put you off investing?
Absolutely. I think there's really three broad things that I really try to get my head around in any investment. I call the first one growth, but it's not really about growth. It's kind of more the size of the opportunity, the size of the prize. So really understanding, the potential for a company, given their market positioning, how big could they be in 5, 10, 15 years if they're able to execute. And then, secondly is really thinking about the quality of a business. So, incremental returns on capital, free cash flow generation, et cetera. So that's really comes down to understanding competitive advantage and a company's moat and how sustainable that is. Ideally, those two things come together. So you've got a company that's generating high incremental returns on capital that they're reinvesting in the growth opportunity. And then I think the final aspect is really management. So you can have the business and the opportunity, but management really needs to execute. So, I think about, really management strategy, how clear that is, the vision, and then, really just about execution, really delivering on the opportunity. And I think the final part of that would be just the degree to which, management's really, aligned with you as a minority shareholder. So that's the key things I focus on. And, I think the negatives are anything where that really falls down. So in the quality of the business, okay, maybe the competitive moat isn't as strong as we were thinking. But I think, the bigger negative is or potential negative is management. So I think if you lose faith in, their ability to execute, again, the degree to which they're aligned with us as minority shareholders, I think that's a pretty big negative. It's kind of the reverse of those factors, really.
So when the trust was launched over a decade ago now, one of the big themes highlighted by your predecessor, Anthony Bolton, was the huge growth potential of China's domestic consumption. This remains a key theme in the trust today. So I was just wondering whether you could go into a bit of detail regarding how you seek to profit from that. And also, compared to 10 years ago, is the opportunity now as great as it was back then?
Yeah, I think the opportunity is still really significant. It's really much of the same thesis. Perhaps one thing that maybe has changed is that I think there's a recognition within policymakers that this is really important. They need to bring about this shift away from a reliance on investment, on exports. The consumption really needs to be a big driver of the economy. So that's, I think, a nice tailwind to have. But really the bigger driver is just the natural development of the middle class. You've still got urbanization underway. There's a huge aspirational element, to people. I mean, I guess the first stage is really people wanting to have, many of those things that we have in the West. And there's just a lot of those categories that are still underpenetrated, even in an area like autos, even though, China is still the biggest auto market in the world, is still, very underpenetrated relative to the West. And then, I think in addition to that, just you're going to see increasing diversity, increasing premiumization, across a range of categories as the consumer becomes more sophisticated over time. So it's just a really strong underlying trend that, that I think really has legs for, at least, the next 5, 10 years, if not longer. So, it's great to be, looking for great companies in that sector that have such a strong tailwind. I think whatever the final growth number that you plug into your model for growth, overall growth in China, I think it's fair to assume that, consumption is going to be growing faster. And that's in both goods and services, really. There's just still really a lot of opportunity, and they're really big markets. These clusters of consumers, in various parts of China, I mean, they're effectively countries, in terms of their size relative to a lot of other markets. So, again, just a strong tailwind. and really big markets for companies that can execute.
Technology related companies are another key focus for the trust. How much overall exposure does the trust have to tech related names? And also, do you believe there is greater growth potential for these Chinese tech companies versus the more famous US technology companies?
Yeah, it's an interesting question. I mean, technology is a really core theme within the portfolio. A lot of it overlaps, I think, with the consumption theme. But also, there's just a huge amount of innovation in China. So, the overall exposure to technology, if you include communication services, which includes the likes of Tencent, would be approaching 40% of sort of overall net exposure. So, a pretty significant overweight for me. But again, really seeking to benefit from the underlying change, just a huge pace of innovation, a lot of growth potential. Coming to that point of growth potential, it kind of varies by market, because something like e-commerce, if you look at actual e-commerce penetration, it's already, I mean, we came from a low base, but it's actually higher than a lot of other markets now. China has developed quickly. It is still growing faster than most markets, but if you thought about it, I think there's a lot of markets out there that you could argue have greater growth potential in areas like e-commerce because the penetration is higher. But at the same time, there's other parts of the market that just have, I think, really significant growth potential. Areas like cloud penetration is still much lower in China relative to, to many markets in the West. And of course, the big tech conglomerates, have pretty significant financial businesses. And I think that's probably something that you could say distinguishes them from many of the tech companies in the West. Just really strong financial businesses that, have really significant potential and are going to be significant really, growth drivers, for these companies. And I think you can argue at fairly early stage of development. Many financial services in China are at, sort of a relatively early stage of development, relative to the way you've seen them develop in other markets. But developing quickly, and these big tech conglomerates are really well positioned to leverage that growth.
The top two holdings in the trust, Alibaba and Tencent, they account for just over 25% of the portfolio.
Right.
How heavily influential are these two companies in terms of the overall performance of the trust? Say, for example, if both have an exceptional year or an exceptionally poor year, would this detract from the rest of the portfolio?
Right. So, it's a good question. There are significant, portion of the portfolio, but yet they're underweight. And it's not that I think the companies are overvalued. I actually think if you really go through the sum of the parts, think about the individual businesses, they are still undervalued. And that's why I'm happy to have them as significant positions. But, they're underweight. I think there's other parts of the market where there's more value. And, in a year when it's a very strong market and these companies outperform, they can be a drag on performance, as they actually have been in the last 12 months. But, the hope is that, leveraging, the research team that we have, looking for, perhaps ideas that are less well understood, we can make up for, any drag on performance. And, obviously if they did underperform, at least from a relative perspective, that would be a plus for relative performance. But, thinking just from an absolute sense, I'm quite happy to have them as sort of significant, parts of the portfolio. And, it's important to be invested in companies that are really core of really just the overall economy in China.
So compared to the index, those two holdings, they are slightly underweight.
They are, yeah. They're a few hundred basis points underweight. So again, in an up market, they will be a drag, but again, hopefully offset by other names that I think are, offer more value in the market.
I also wanted to ask whether you have exposure to Ant Group, which many years ago was spun out of Alibaba. Is this one of your unlisted holdings in the trust? I'm asking this question a couple of days on from the firm's IPO being unexpectedly delayed. I also wanted to ask, what are the investment implications of that delay?
Well, first of all, in terms of ownership of Ant, I'm not a shareholder of Ant. We've followed the company very closely for years. I guess every investor takes a different approach on this. we, as a firm, we're concerned that, just from a compliance perspective, that, if we're getting, a lot of information about Ant as an unlisted investment, that could potentially block us as an investor in Alibaba, which, I think, we played on the conservative side and decided that was probably too great a risk to take. So we're not an investor. Obviously, it's a pretty significant portion of the value of Alibaba. In terms of what's played out over the past few weeks in terms of the delay of the IPO, I think it's, I guess, a reminder of the force of government in China. It's something that you need to be aware of. It was something that I guess we had viewed as something to watch. We're closely following the way regulation is developing in the so-called fintech space, and I think we're quite aware of, in many ways, the gap that existed between the formal banking space in terms of regulation, between the formal banking space and a lot of the fintech players, and that's slowly been evolving. So I think that's this is part of that process of more regulation coming in. I think it was kind of inevitable that we'd definitely see more regulation. I don't see too much in terms of really broader consequences for the market. Again, like I said, a reminder that government, where sort of the general direction that the government is focused on is important. You just need to be aware of that. I guess kind of unfortunate timing in this case, but I don't think it sort of really if it's something that's always in the back of your mind, for anyone that's been investing for China for some time. So I don't think it really changes the sort of investment landscape too much.